Welcome to the channel where we make money talk make sense. No financial fluff, no scary spreadsheets, just real conversations in plain English. Now, if you are over 55, chances are you have already been seduced by those glossy brochures or smooth talking TV ads for equity release or lifetime mortgages. They say things like, unlock the value in your home, no monthly payments, live your best life. And look, in principle, it sounds amazing. Free up some cash, stay in the home you love, give the kids a bit early, or book that dream cruise you never got around to. But here's the part they don't shout about. This is not just a tap and go offer, it's a big financial commitment. And what starts out feeling like freedom can quietly grow into something you were not expecting, especially if no one's walked you through the details. That's why I'm sitting down with Steve today. Now, Steve is not just another advisor, he is a chartered independent financial advisor, which in our world is the equivalent of having black belt status in mortgages and money. He has been doing this for over 25 years, helping people just like you make some of the most important financial decisions of their lives. What really sets him apart? He doesn't just work with one provider or push a shiny product. He covers the whole market. That means every option, every lender, every angle tailored for you. He has worked with cautious savers, bold adventurers, retired nurses, self-employed builders, even clients who were convinced they had already missed the boat. But I'll tell you something, here's a spoiler alert, they hadn't. So, whether you are already retired, semi-retired, or just starting to think about your later years, this episode is packed with what you really need to know. Let's get into it.
Hi Vera, it's great to be here. And yep, this is one of those topics where the small print really matters. Let's unpack it.
Okay, Steve, what is equity release really?
It's the way to get money from your house, also called lifetime mortgages. There are two main types. Lifetime mortgages, you borrow money, no monthly payments, the interest just quietly builds up in the background. Although there are schemes which allow monthly payments if you want to keep the interest from compounding. Home reversion is where you sell your home and you rent it back from the provider, which is not that popular.
So you get to keep the home, but not quite the value.
Exactly. You're tapping into your future equity, but you're also shrinking what you leave behind, unless, of course, property prices continue to rise, offsetting against the charge, although you've also got inflation to consider.
That's where the real kicker comes in, isn't it? Because what starts out as a little help now can turn into a much bigger problem later, especially if we are not careful with interest. Let's talk about that.
Let's say grandma takes 30,000 for a new kitchen and some home improvements, great idea, but no repayments are made and the interest starts to snowball, compounding. After 10 years, she owes the original 30,000 and accumulating interest each month, and let's say the debt is 53,000. Then continuing to compound after 20 years, we're looking at 96,000 secured against the property.
Wow, that's massive.
Yes, you've got to think of it from the provider's perspective. they are lending the money without an end date. They don't know when they're going to get their money back. And also it's private equity, so you pay a higher interest rate than high street banks and building societies. And that compounding interest over time covers inflation, but also the risk of a long return. So over time, compounding interest does wipe out the increasing value of the house. So that's why potential borrowers are encouraged to take independent advice and think carefully of the consequences of their actions. Sometimes family members are distraught at the compounding interest over time.
And the worst part, most people don't realize it's happening until the statement comes in. Let's not leave people in the dark. What other options should they know about?
Okay, there's other alternatives, such as if there is an income in the background, you may qualify for a retirement interest only style mortgage, which is lending into retirement but servicing the debt, and ultimately that reduces that compounding interest. So it's a mortgage that is designed specifically for those at retirement or near retirement, avoiding that ever increasing snowballing interest.
What other options should they know about?
Other options include retirement interest only mortgages, where you pay an interest every month so the debt doesn't grow. Also, retirement interest only, you can pay interest plus capital to avoid compounding interest. Talk to family and friends about the options.
So what are the other options?
Well, let's look at age. Let's look at income from all sources: pensions, investments, potential inheritance. All of these can be used to justify a mortgage and therefore avoid compounding interest on an equity release. Ultimately, equity release could be the right option, but later on in life. Age, income, credit score, home value. For interest-only options, they'll want to see steady income from all sources.
Well, these stories show it's not one size fits all.
That's correct. It's about matching the right product to the person, not selling a dream. Here's what people often overlook: ballooning debts, fees such as solicitors and arrangement fees, reducing inheritance, delays from solicitors, the potential of lost state benefits.
And this happens while families are already stressed, grieving, or just trying to sort things out. We are here to help, not sell.
We'll explain every option, answer your questions, provide you with tailored illustrations, and give you the space to think it through.
Thanks for joining us today. Like the video if it helped you, subscribe for more no jargon financial insights, and share this with someone who is thinking about unlocking equity in their home.
And if you've got any questions, we're here to help. Let's talk.
You ask, we deliver. That's the Heathcote way.